Edward Boyd joins us, our business reporter. Ed, good morning. The RBA lifted rates to an 11-year high yesterday, and the tough news for homeowners is that might not be the end of it.
Yeah, look, I think Governor Lowe made it pretty clear in his statement last night that this is not going to be the end of it. The cash rate is unfortunately going to continue rising in Australia. It's already at 4.1%. The cash rate's lifted 4% in just over 1 year. So at 12 meetings out of 13 meetings that the Reserve Bank's held, they've raised the cash rate. So what's that done for mortgage holders? Well, it's really pushing up their repayments costs. So someone on a $500,000 loan is now paying about $1,100 more per month now than they were back in April last year before rates started to rise. And for $1 million loan, you're looking at about $2,300 more additional repayments each month. So the RBA lifted rates yesterday. So far, only Westpac has raised rates by 25 basis points, but I think, Pete, we can expect all of the banks to lift rates over the next couple of days. They're obviously just letting Westpac get some bad publicity, and then they'll take over and
I don't
lift
know
rates
why.
very soon.
I just don't know why they do this. Like we know all four of you are going to go.
They're going to be going up. That's
what they do. So they do that because like the first one to go gets the bad press.
Yeah, they'll cop some heat in the media, then everyone forgets about it and it's all over.
Okay. So we're going to hear from Governor Lowe later on this morning. He is now under the gun from both Aussie households and the government.
He sure is. And look, Joel alluded to this earlier this morning on your show, but basically the Treasurer yesterday in his commentary after the bank lifted rates was, well, it's up to the Reserve Bank to talk about and to defend its decisions. So there's obviously a bit of friction there between the RBA and between the Treasurer and the government. So Governor Lowe speaking at 9:20 this morning at a banking conference in Sydney. I expect him to explain his rates call yesterday and explain the outlook for rates in Australia, and hopefully there's a Q&A session afterwards and we can get some questions in around where rates are going and whether we're entering a wage price spiral, which is where wages are going up, inflation's going up together, people start spending their money in the economy that they've been given as a pay rise, and it causes this big problem, which means the RBA would need to raise rates even further.
I feel like that's getting... I mean, I'm no economic expert, but I feel like that's becoming more likely. And that economic plane that Governor Lowe is trying to land now, the runway, it's getting much thinner, isn't it, for that harder landing?
It is, yeah. So there are quite a few economists now that think we are heading towards a recession. We may have been able to get a soft landing before. It looks like we're going towards a hard landing now, which is where economic growth goes backwards and unemployment goes up pretty high. So it is a tough time right now for the economy.
Yeah, sure is. And a bit of focus today on the March quarter GDP numbers.
Yeah, exactly. Look, they come out this morning from the Bureau of Statistics, and the expectation is economic growth is going to be pretty weak during the first 3 months of this year. Some economists actually think we could see a negative figure today, but the expectation from Bloomberg, as you can see, is about a 0.3% increase in the March quarter on quarter and year-on-year increase of 2.4%. But the big thing to watch, Pete, is household consumption spending. That's the one that really drives economic growth, and we know people are starting to tighten up their spending. We know inflation did peak in December, but it's still very high. But that's the figure to look for today to really see how much people have been spending money in the economy during the first 3 months of this year.
Okay. Good one, Ed. Chat to you soon.
Thanks, Ben.